Hey, I just want to drop this quick video over to you to talk to you about seller pay closing costs, because a lot of realtors are under the misconception that it's 3% for conventional and 6% for government, and for veterans it's 4%, which that's definitely not true for veterans. You can give more back on a VA loan than you can give back on any other transaction, and I'll get into that in the end. But I'm going to start with the lowest amount, which is the investor, and then end with the highest amount, which is the VA. So let's jump right into it. So if an investor is purchasing a property, the most that they can get back is 2%, regardless of how much they put down, regardless of the circumstances. If it's an investment property, they can only get back 2% of the purchase price from the seller. If it's a buyer purchasing for themselves, meaning it's a first or a second home, they're not renting out the property, they're buying it for their own personal use, the max that person can get back is going to depend on how much they put down. So for a normal person is putting 3% down or 5% down, yes, the rule is correct that it's 3% is the max that they can get back. Whenever you put down less than 10%, the maximum you can get back from the seller is 3%. But if you get to 10%, you can actually get back 6%. That's really important, because a lot of times if a person is planning to do a standard 5% down conventional loan, which is what a lot of the low down payment buyers are doing, it could be a lot more beneficial for that person to say, hey, let me ask for 6% or 5% back from the seller in closing costs, and I'll put down 10%. They're going to be coming out of pocket enough cash to put 10% down anyway, if they're going to be putting 5% down and paying their own closing costs. But if they're able to put down 10% and then ask for extra funds back from the seller, assuming you can negotiate that into your deal, that can put them in a way better position. Not only can it help them qualify for more because their monthly payment's going to be lower, but getting 5 or 6% back from the seller may cover more of the concessions, which allows them to buy down their rate and gets their payment down even lower. So you can take somebody who, their max was $250,000 putting 5% down, but if they can get back 6% from the seller, you may be able to bump that up to 270, 280, getting that extra money back because their monthly payment's lower, and it creates an overall better situation for them. So the last one is going to be if a person, tier in terms of conventional, the last one is going to be if a person's putting 25% down, they can actually get up to 9% back. I know that's going to be less common, but that is a rule. If they're putting 25% down or more, they can get 9% back. Now I want to get into the government loans. FHA and USDA are separate rules than conventional. FHA and USDA is simple, 6%. That's the max that you can get back. But on VA, a lot of people think that it's 4%. And if you read the VA guidelines, they do say the maximum seller concession is 4%. But the thing that's important is that the VA defines seller concession different than you define seller concession. The VA defines a seller concession as anything that's above normal closing costs. So a seller can pay all of the closing costs for a buyer as long as it falls into, the normal title fees or lender fees or anything that would be like a state and local tax. All that stuff doesn't even fall into the 4%. The only things that are normal that will fall into the 4% is the property taxes and insurance. That 4% rule is anything that's above the normal closing costs. That means that they can pay off debt for the buyer, they can buy down their interest rate, they can do what no other transaction will allow you to do. You can get 8, 9, even 10% back from the seller on a VA transaction. The other thing to take note of is the importance or the power of receiving back seller concessions in this low interest rate environment, especially in recent years where it's really, really cheap to buy down the rate. I'll give you an example. Let's say a person is purchasing a home for $250,000, and they would normally be asking for a price of $245,000 to get $5,000 off the price. Well, that $5,000 difference in the price is only going to make a difference in about $25 a month when you're getting 3% interest rate on your mortgage. But if you're able to ask for $5,000 back in seller concessions, and you're able to reduce that interest rate by more than half a point or even up to a point, that can make a difference in $100 a month on that person's qualification. So asking for the seller concessions can actually help a person qualify for more or end up with a significantly lower payment, because cash is king when the interest rate's 3%. I mean, that's like free money. So borrowing the money is, negligible in terms of the monthly payment compared to having it back now. Money now, when the interest rates are so low, is worth a lot more than money later. So anyway, that's the last thing I was going to say with it. I just wanted to drop that information over to you guys. I get a lot of feedback from realtors asking me about seller pay closing costs, and it's very, very common for them not to know those rules. If you have any questions, reach out to me. I love to talk about this stuff. I'm a mortgage nerd. I'll catch you later.